Hello everyone, I'm back. It's been a while. Today I'm going to summarize gold news country by country. Just for the sake of simplicity and speed, I'm going to read from my notes. Let's talk about the big picture. Gold is at a record after jumping again this week. The main push? Markets expect interest rate cuts in the US, plus fresh US-China trade tensions and wider geopolitical stress in general. Gold funds, ETFs, saw big inflows lately, adding fuel to the rally. Central banks are still big buyers in 2025. Strong, if uneven, month to month. Let's talk about the United States, which of course affects gold prices globally. Rate cut bets are back on. Lower rates make non-yielding gold more attractive. A federal government shutdown, now into mid-October, is boosting safe haven demand. Let's go to China. Prices in China are sky high. Shoppers are trading in old jewelry and buying smaller pieces. Wholesale volumes slowed as affordability got squeezed. This is to be expected when prices rise so dramatically like they have. The central bank reported another small reserve increase in August, part of this year's steady additions. The Shanghai Gold Exchange is expanding its physical vault network, including Hong Kong, a long-term move that could shift where gold is stored and delivered. Renewed U.S.-China tariff threats and export controls are a clear near-term support for gold. Let's go to India now. Festival season, Dussehra and Diwali, is keeping demand ticking along even with record prices. Buyers are picky on weight and purity. Indian gold ETFs just had a record monthly inflow in September. Now to Europe. Swiss customs data show a sharp drop in exports to the US after a tariff scare, with flows rotating elsewhere. Shifts like this tell you where physical metal is actually going. Separate industry tracking also flagged a jump in Swiss exports to Asia after that tariff shock. To Japan. The yen's slide plus global price strength pushed retail gold above 21,000 yen per gram for the first time. That keeps local interest high. Now to the Middle East. A fragile Israel-Gaza ceasefire and disputes over aid flows keep tensions high. Another reason investors pay up for safety. Africa, supply watch. Mali faces fuel shortages after a militant blockade, complicating logistics in a major gold-producing country. Southeast Asia. Indonesia. Freeport's giant Grasberg copper mine remains disrupted after a deadly mudflow. Authorities are probing and output has been hit. Supply shocks like this can matter at the margin. Australia, where I'm from. The Perth Mint, great place to buy gold by the way, reports solid coin and bar sales. The Reserve Bank of Australia is cautious and data dependent. Rate path matters for local gold appetite. So why do these move gold for those who may not know? Rates. When investors expect rate cuts, yields fall and therefore gold looks better. Risk. Trade fights, wars or policy shocks push people towards safe assets like gold. Big buyers. They move the market. When central banks and ETFs buy, they soak up a lot of the metal quickly, which can explain a lot of the fast price rises. Real world flows. Swiss export shifts, China's retail patterns, and India's festival buying show where the metal is actually moving. Thank you for watching.